Joseph Halpern, everybody keeps saying that they need to play defense because of the volatility we've seen so far this year in the market. Let's run through a few different options where people can get a little bit of protection. The first is through a hedge fund. So how do you know whether or not you're right to invest in a hedge fund?
Sure. So usually hedge funds have some minimum amount of money you have to put in, and they have gates. So you really want to be careful when entering a hedge fund to understand what the rules are involved in that hedge fund, and then you also want to look at the strategy. Hedge funds can be very aggressive products. If you're looking to protect yourself from a market which has been up for a very long time at this point, just check, see what they're doing, and be careful of that lack of transparency involved.
And then nowadays, you don't have to go into a hedge fund and give away a lot of your upside because you can go into a liquid alternative or a mutual fund or an ETF that acts like a hedge fund, but it's much cheaper, right?
That's correct. And I think those products are really great. There's a number of them out on the market, and they keep on coming out. And what they're really looking to do is to provide a bit more liquidity and a bit more transparency in what's going on beneath that wrapper. It's a bit more accessible to the end consumer. And again, I just say to the consumer, you need to watch out. These things can be complex. Understand what you're getting into. Not every liquid alt looks to protect you, going back to what you said earlier about a high level of volatility in the market right now.
You could also get into something called a structured note, where you get a predefined return. But that way you're also giving up your upside, because if the market takes off like it did 2 years ago, you're just going to get that predefined return, right?
Sure. So structured notes are these products issued by banks. And what they look to do is really give you a definition, a defined outcome around your investment. And what's really positive about these products is that it does, a defined level of protection. And then, as you mentioned, you might have a cap on your performance, meaning if the market moves up a lot, you're really in trouble. Us at Exceed Investments are coming out with products that look to give you that definition, similar to a structured note, essentially saying, hey, I'll trade off some known risk, right, where I'm protected on the downside in return for being capped on the upside. So it's one of those risk returns where you understand a little bit better.
Another way to get control of your portfolio is to get involved with a separately managed account. Instead of a mutual fund where the fund manager is making all the trades for you, you have a little bit more choice involved with an SMA.
That's correct. And on top of choice, you have a little more control. A lot of times those SMAs are staying within an account that you have more control of. And ultimately, SMAs are very flexible. You could discuss fees with the end manager, and you could place a lot of different sort of strategies there. So another real good vehicle for customers to access.
And then finally, if you're worried about volatility in the market, what about playing with index options?
Sure. So going back to that defined outcome, what index options really do is give you that defined element. If the market, let's say, is at 2100, and you say, hey, I can't afford to take a loss of more than 10%, you could go into the market and purchase a downside put that will protect you. That's really defined. And again, that's what we're trying to do at Exceed, give you more definition by taking advantage of multiple options and really creating a defined exposure for that end investor. That's what options do very well. That's what structured notes do, albeit in maybe a less liquid, less transparent vehicle.
All right. Thanks a lot, Joseph.
Thank you.
Thank you for watching The Street.